Hello friends. In the last lecture, I discussed about the methods of valuation of goodwill. Right? I told you about the various methods how we can value the goodwill. So basically, there are three methods: average profit method, super profit method, and the capitalization method. Then further we have the subdivisions. For average profit method, we have simple average profit and the weighted average profit. For the capitalization method, we have the capitalization of average profits and the capitalization of super profits. Right? So let's start with the first one, that is the simple average profit method. Let's start with simple average profit method. Right? So as the name suggests, this is a very simple method. Right? The word simple is in the name itself. It says it is very, very simple. Simple average profit method. Right? And the second thing the name suggests is we have to average the profits. We have to take the average of the profits of the last few years. Right? This makes simple average profit method. Now there is a thing to understand: what profits are to be averaged. Right? The question is what profits are to be averaged. Which profits to take for the average? And the answer is normal profits. That means first of all we will calculate the normal profits of the business. Now the question is, what are normal profits? Right? The definition, if I talk of normal profits in a very layman language, I'll say normal profits are profits earned through normal activities of the business. Right? So what are normal profits? The profits earned through the normal activities of a business. Right? We are dealing in the products, we sell those products, we earn the profits, that are normal profits. Clear? Now we have some more terms relating to this normal profits. What are the terms? One term is abnormal gain. What is abnormal gain? The gain which has not been gained in the normal course of business, not earned in the normal course of business, not earned in the normal course of business. Right? For example, there was a case pending in the court. Right? There was a case pending in the court. In a particular year, the decision came and the decision came in favor of the company and you received rupees 2 lakh as compensation. In that case, now this 2 lakh is not through the normal activities of the business, right? Although this case was related to business, but this 2 lakh income, 2 lakh compensation that you have received is not through the normal activities of the business. Normal activities means through the sale of the products that you are manufacturing. It is not through that. So that is abnormal gain. That is gain beyond the normal activities of the business, right? That is abnormal gain. Next term is abnormal loss. What is abnormal loss? Abnormal loss is loss occurring not in the normal course of business. Loss occurring not in normal course. Right? For example, there were floods in a particular year, and due to the floods, my material got destroyed. Right? Worth rupees 5 lakh. My material worth 5 lakh got destroyed due to floods. This is abnormal loss, because this loss will not occur every year. This is because of some abnormal activity taking place in a particular year. Clear? So what is abnormal gain? The gain that has been the gain earned in the not earned in the normal course of business. Abnormal loss is loss occurring not in the normal course of business. Right? Now there is one more term, non-business income. As the name suggests, the business which is not the income which is not related to business. For example, interest on my personal savings account in a bank. This is not a business income, this is my personal income, right? Then we have non-business expense. What is a non-business expense? The expense which has not been occurred for business. Expense not incurred for business. For example, insurance policy taken for my personal vehicle. Expense incurred on the insurance taken for my personal vehicle. This is a non-business expense. This expense is not related to any activity of the business. Right? Why I have told you all these terms? Because these terms are really important for calculating normal profits. Now if I talk of calculation of normal profits, right, we'll have profits of the past years, profits of past years, right? Now in these profits, any gain, even a gain of this 2 lakhs would be added, but it is not for the business. We have to calculate the profits earned in the normal course of business. So what will we do? We will subtract any abnormal gains, right? We will also subtract any non-business incomes. Why? Because we have to calculate the profits which have been earned in the normal course of business, right? This is a non-business income. We will subtract the non-business income, right? We'll add back any abnormal loss, like the gains we have subtracted. We will add back any abnormal loss, and we'll add back any non-business expense, right? This way we will reach at the profits earned in the normal course of business. These are normal profits. All these incomes or all these losses, expenses, these are not in the normal course of business. That's why we have subtracted or added them to reach at the normal profits, right? So these are the normal profits. Now we'll find out average profits. Very simple. Normal profits divided by number of years for which profits are given, right? Like we take simple average, normal profits divided by number of years. Now you will ask, where is goodwill? How to calculate goodwill? Tell us that. Okay, now I'll tell you that how to calculate goodwill. Before that, we have one more important term with us, that is number of years purchase. This is one very important term in the valuation of goodwill, number of years purchase. What it means? See, I am running business for the last 4 years. I am considering the profits for the last 4 years. 10,000, 11,000, 10,500, 11,500. I am sitting in 2014 end. Right? Now my expectation is, according to the market conditions, I expect that this trend of profit, that is around 10,000, 11,000, yeah, right, this trend of profit I will be earning for the next 3 years also, right? Like here I earn 12,000, here 11,000, 11,500, right? I am expecting that at least this much of profits I'll be earning in the next 3 years also, right? This 3 years is number of years purchase. Clear? Now if I write the definition, it says number of years purchase is for how many years firm will earn the same amount of profit right, because of the past efforts. Now because they have done a lot of efforts in these 4 years, they have established themselves in the market, they have got some goodwill in the market, that they expect that we will be earning this much of profits in the next, at least in the next 3 years. Right? So now what is goodwill? Now the important point is, what is goodwill? Goodwill is, this case is average profits into number of years purchase. See, try to read this formula. What it says, for how many years the firm will earn this much profits, average profits, because of the past efforts. That is goodwill of the firm. Right? For how many years this much average profits the firm is expected to earn because of the past efforts. Right? So this is goodwill. This is goodwill under simple average profit. Right? Very simple. This is goodwill under simple average profit method. Try to read the formula. I have told you what is number of years purchase. You know what are average profits. Then the formula read is, for how many years the firm is expected to earn these average profits because of the past efforts. If we multiply this thing, we will get the goodwill of the firm, the value of the goodwill that the firm has established. Right? The goodwill that the firm has established from 2011 to 2012, and this goodwill is expected to continue for the next 3 years also. Right? The firm is expecting that they will enjoy this reputation over a period of time that they have established in the last few years. Clear? So this is goodwill under simple average profit method. Goodwill is equal to, what are the average profits into number of years purchase. Number of years purchase will be given to you in the question always, but you should know what it means. Right? So I have told you all the terms. I have told you what are the normal profits. Profits earned through normal activities. Abnormal gain we have discussed how to calculate normal profits. So you can write these down. These are very, very important. This abnormal gain loss will not be given to you anywhere in the books. So you can write these terms with examples. Okay. The very important thing is to calculate the normal profits. You should know how to calculate what is a normal profit and how to calculate the normal profits. This is very important. Clear?